Good day, folks. I just wanted to make a quick short video, relatively short. I feel like I keep saying this all the time, even though it may not be the case. But on the starting off with a dollar index from the 4-hour chart, the inverse fair value gap that I outlined in my previous video seems to be respecting price so far, even though I am keeping in mind these two bullish candles. I think we may rally one more time up into them. We may see a high of week made inside of these two candles extended to the right, which acts as a bearish order block. So we may turtle soup this high tomorrow and on Wednesday, then see the proper drop from there. But we'll see what price has for us. In the meantime, I was paying attention as we opened or traded into New York session. We had this CB, this sell side imbalance being created. This candlestick low to this candlestick high. We have a fair value gap in the form of a sell side imbalance, and we traded into it. This plays a massive role, a massive shift, or it is a big decision maker for me when trading the indices. So moving on to S&P 500, on the 1 hour we have this breaker. We have the high made during the London session on Friday, and then we had a low made during New York AM, then a new high, a higher high during New York AM before we displaced lower. So this portion of price action, specifically this candlestick here, this bearish candlestick, created the breaker that I was looking for. And the most sensitive part of a breaker to me is the same portion of price action for an order block entry, which is the body of the low. And I drew that out in price and labeled it as H1 breaker low, in brackets body. So going down to the 5 minutes chart, before we even traded into New York AM session, I noted these two candles, specifically this second one, as a bearish order block. So I basically had this price. I'm not sure how visible this would be on the video, but I had this as my entry when we traded into New York. I wanted to essentially see London's high swept, respect these candles, and then drop lower from there. So looking at the London session, we failed to purge London's low, and we eventually purged the London's high and tapped into this white line right here. This white line, remember, was the H1, the hourly breaker, and then inside of it we had this order block, and we can see how beautifully price rejected from there at 9:30 opening. After rallying up, I got tagged in and we dropped off from there. Right, cool, not a problem. Next part of the trade plan would be to look for confirmation. At this point we had the midnight opening price. This green line over here is the midnight opening price. We displaced lower, closed below the midnight opening price, and created a CB, a fair value gap, in the form of a sell side imbalance from this candle low to this candle high. I re-entered my I would say my confirmation entry, because this top entry, the one that tapped into the order block, was the one that I entered with 7 lots. So inside of this CB I entered 21 lots, because my stop loss would have been at this high, which would have been $1,000, which was the permitted loss for the day, right? So I was sticking within my parameters. So $1,000 would have been there, and my target was London's low but of course taking profit at the new low that was just created, taking partials, I mean partial profits at this low. So price printed, and you can see that we rejected beautifully inside of it. Inside of this CB, we rejected and fell off past this low where I would have taken my partials. And at this point, this was why I had to point out the dollar index. So the CB that I pointed out, if you just check earlier in this video, the CB that I highlighted was being tagged into at this point. So I expected a possible lower price on the dollar index. We could have fallen lower, which also made me feel that we may create a new high on the indices, right? Since they are conversely related. So at this point, I decided to scale out most of my entries. I still have one running with one lot and a stop loss still sitting at the top of this order block. So what I hated about today's action, I guess on my part, I'm not sure how it happened, but this entry right here, the perfect one that I told you, that I mentioned, the perfect one that even gave more than a 5-handle drop, assuming that I got tagged in here to this low, was a 7-handle move, and that's where I got tagged in. 7.5 handles. So I would have taken off my majority off at 5 handles, and with a 21 lot or even 14 lots position, that would have made me more than enough for the day. So of course price decided to continue making new highs, as we are making new highs right now. So that was my trade for the day, for the session, and let's see if I can point it out on MetaTrader. So on MetaTrader, I know it looks like an absolute mess, but I'll try my best to interpret what happened. So we can see I got tagged in at London's high, the 7 lot position. I did not get tagged in, I did not get filled where I would have preferred because of spreads and I guess speed. But this entry was perfectly at the white line that I mentioned earlier, which was the 1 hour breaker entry. So it was still valid to me. Zooming out, we can see that it was also within this order block on the left side. So I was fine with it. Drawing a horizontal line, we can see by delineating there, following it to the right, and we got tagged in there. Stop loss was sitting above this high because of spreads, just like this one is, which might get tagged at $91 loss, but it's fine for the day. I'm happy with the price action for the day and the correlation with the dollar index. So we got a move higher, of course, and enjoyed a little bit of drawdown when price displaced to this point. I mean, took out these lows and essentially traded to the midnight opening price, which was around this area, if you remember. So it displaced lower and I saw price retracing a bit. When I saw it coming back to this CB, this candlestick low, high to this candlestick low, I took partial profits and watched price. So at this next candlestick, this white one, this bullish candlestick, we traded higher, trading inside of this CB that I was explaining earlier, from this candlestick low to this candlestick high. This was where my entry was, the main one that I wanted to actually enter for the session. And hovering over this arrow, let's see, we can see on the profit thing, on the profit section, it says minus 735. So I got stopped out with spreads even, and I was not sure how my stop loss was even at this area. I'm still not sure what happened, and I think it might be something to do with margin, which I have to be very careful with, and which makes me conclude and decide and conclude that I will not be trading anything larger than 7 lots on S&P 500 from now on until I restore the balance, because that's the only thing I can imagine taking me out at this point. So anyway, as expected, we dropped off from there. I took partial off from this remaining one. I took partial off and it dropped even further, taking out the midnight low, well, midnight opening price, and dropped lower than this candle. So I took the rest of the positions off, and I think moved the stop loss of the original to break even, which is why you can see here I got stopped out with $11. So this was the remaining one I decided to execute manually within this same CB, expecting price to hold with the order block and breaker that we mentioned earlier from this area. And of course we may get tagged out, but again, I'll repeat that I enjoyed today's price action just because of the fact that we respected this beautifully, rejected immediately, and gave us the 5 handles that we need in a trading session. And I just got tagged out there now. I wanted to also point out that I was also looking at Euro NZD. I'm not going to mention the drawing liquidity here, but or why I entered at certain areas, but I got stopped out a few times unnecessarily when I could have just moved my stop loss to something comfortable. But my drawing liquidity is on the weekly chart, where we got the relative equal highs at this area. That's where we're headed to. But I drew this second line because of this closer buy side liquidity, which clearly looks like where we are headed to right now. So moving on back down to the 15 minutes chart. Even though I took a little bit of a loss at this point of $100, I did make profit again at this point of a $114. So this was able to essentially replace the loss that I took from this point, and in the process currently holding up a little bit. I mean, I could close the trade right now and I'll be up for the day, even though I'm currently in a loss overall. So looking to see the history for the day, let me filter down to just today, which is this price action. We can see from morning session the losses that I took from Euro NZD and Euro USD buy entries, and of course S&P 500. So I would go through these Euro USD trades, but it's essentially what I was looking for on the dollar index, which I highlighted earlier this morning. During London session, I pointed out what I was looking for at Euro USD. It's exactly what I took. The difference being that we got a deeper retracement into the at this level. Let me just show it quickly. We got a deeper retracement into this inverse fair value gap from the 4-hour. So remembering what I was looking for, which is obviously the inverse of dollar index, I had a trade executed at this point. We swept the low, I got stopped out, and I was anticipating us trading into this 4-hour order block for higher prices to clear these equal highs. So that's how I managed to get a little bit of profit at that point and got stopped out at that point. But it wasn't much because everything essentially neutralized each other. Now moving on to the New York session, we can see the sell trade that I took. The first partial was up by 300 profit. Then the 14, which was the main one that I got stopped out, I'm guessing with margin. I don't As we can see, it's not even highlighted on the stop loss or the TP, and I definitely did not manually exit the trade, so I'm guessing the margin got me stopped out, which tells me that I should only trade a maximum of 7 from now on. So I got stopped out there with minus 300. So now my goal for the New York AM wasn't even to make profits anymore, even though this trade on its own would have made me about $1,500 profit at that TP level that I mentioned at midnight price. It would have been 1,500, but I got stopped out and that did not happen. So that kind of sucked. If I did a little bit of calculation, as we can see, I took out this profit, this PNL window, because I did not want to see it. So anyway, with the remainder, Euro NZD got stopped out at this TP, the one that I pointed out before at 114. The remainder, the partials that I was taking on SPX 500, you can see them here at 771, at 189, then 356, and I just got stopped out at this one, I'm guessing at minus 96. So overall for the day, I'm down by about $60, which is not the best. If you add commission to that, it's about $109.41. And I'm not sure if I'm done for the day, but I should call it a day there. I don't see anything new, and I don't believe I'll be trading the PM session today. So that's all for now. Stay safe and good trading.